Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak, your podcast available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 26th of March in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Chancellor Rachel Reeves gets ready to slash billions in UK government spending in today's spring statement.
Russia and Ukraine agree to a ceasefire in the Black Sea, but Moscow and Washington send differing signals on the terms.
Plus, they call him the sheriff, why Switzerland's financial regulator is facing off against UBS and the country's banking elite.
Let's start with a roundup of our top stories.
The UK's Chancellor Rachel Reeves is expected to announce £10 billion of cuts to day-to-day government spending today as part of efforts to shore up the public finances. Higher borrowing costs have likely erased the narrow headroom left by the Chancellor after October's budget. The Office for Budget Responsibility is also expected to halve its growth forecast for 2025 to around 1%. But Reeves says she won't raise taxes or change her fiscal rules, which require day-to-day spending to be covered by taxes.
We will continue to meet the fiscal rules that I set out in the budget next year. Economic stability is non-negotiable. I will never play fast and loose with the public finances like the previous Conservative government did. I have returned stability to the UK economy.
Bloomberg Economics estimates that Reeves faces an extra £17 billion of borrowing needs since her budget in October, with £5 billion saved through plans to cut welfare payments. The looming spending cuts and plans to lower disability benefits have already provoked a revolt within Cabinet and the wider Labour Party.
Fresh doubts have been raised, meanwhile, about the accuracy of official UK data. A new report by Oxford Economics warns that the mistakes could end up contributing to a policy error by the Bank of England. Bloomberg's Tiwa Adebayo has more.
Britain's Office for National Statistics has already faced setbacks in producing reliable labour market figures. Now, some are saying those issues are just the tip of the iceberg. New analysis by Oxford Economics points to potential issues with GDP, retail sales and wage growth estimates from the body, warning the inaccuracies could throw the Bank of England off course as it considers how quickly to cut rates. The news comes just weeks after the ONS delayed the publication of its trade and producer price estimates, and regulators began looking into its data collection methods. A spokesperson from the office defended its wage growth figures, arguing that both survey-based and administrative data measures of earnings show similar levels of growth. In London, Tiwa Adebayo, Bloomberg Radio.
The United States says Russia and Ukraine have agreed to a ceasefire in the Black Sea. The Kremlin confirmed the agreement but says it's conditional on lifting sanctions on banks and companies involved in agricultural exports. While the White House did not mention the stipulations, the US statement does say they will help restore Russia's access to the world market and enhance access to ports and payment systems for such transactions. Ukraine's President Volodymyr Zelensky says his forces would observe the partial truce immediately, but in a video post on X also sounded this warning.
If this agreement fails, if Russia does not fulfill the terms of today's agreement and instead tries once again to pressure the US, Europe and Ukraine, then I believe there should be only one response. Definitely new sanctions. Definitely more pressure. How Russia behaves in the coming days will reveal a lot, if not everything.
Zelensky's words, spoken there by a translator, come as President Trump conceded in an interview with Newsmax that Vladimir Putin may be delaying a full ceasefire agreement.
I think that Russia wants to see an end to it, but it could be they're dragging their feet. I've done it over the years. I don't want to sign a contract. I want to sort of stay in the game, but maybe I don't want to do it quite. I'm not sure. But no, I think Russia would like to see it end, and I think Zelensky would like to see it end at this point.
Bloomberg understands the Trump administration is aiming to reach a full ceasefire as soon as the 20th of April, a timeline that's seen as overly ambitious by Ukrainian and European officials.
The Trump administration says that it is investigating the addition of journalist Jeffrey Goldberg to a group chat of top US officials discussing plans for military strikes in Yemen. The incident sparked a firestorm in Washington with concerns over the handling of sensitive information. The group was communicating through the encrypted messaging app Signal. Speaking on Fox News, US National Security Advisor Mike Waltz accepted his role in the breach.
I take responsibility. I built the group.
Okay.
So but look, that's the part that we have to figure out. And that's the part that embarrassing, yes. We made a mistake. We're moving forward, and we're going to continue to knock it out of the park for this president.
Mike Waltz was speaking to Fox News' Laura Ingraham. President Trump said that he did not believe that the disclosures demanded a criminal investigation or a directive banning the use of Signal by officials.
US tariffs on copper imports could be coming within weeks, according to sources who've spoken to Bloomberg. That will be months earlier than had been expected, with Trump previously threatening to impose a duty of 25% on all copper imports. The news comes as the US president told Newsmax there would be limited exceptions to his tariff push.
Not too many exceptions. No, I don't want to have too many exceptions. Yeah. Look, we've been ripped off for 45 years by other countries, 50 years more. We always were soft and weak. It's almost like we had people that didn't know what they were doing. We were just ripped as a country like nobody has ever seen before.
The comments on Newsmax offer the latest hint from President Trump about next week's planned announcement of so-called reciprocal duties on global trading partners. The date is to be headlined by levies for countries that impose their own tariffs on US goods, though the exact size, scope and method of those tariffs hasn't yet been disclosed.
Chinese banks are hiring staff who've been laid off by their international rivals in Hong Kong. Bloomberg analysis shows some 40 ex-bankers from the likes of UBS and BNP Paribas have found work at Chinese brokerages in the last year. That's after a wave of layoffs in the financial hub. Compensation, though, tends to be 30 to 40% lower than at global firms. But with job openings scarce, many are drawn to the chance of a promotion. So those are our top stories. Let's get to the markets this morning. US copper prices have surged to a record high as traders price in the possibility of hefty import tariffs. New York copper futures, though, have seen a divergence with LME copper. That continues. Asian stocks are trading in a tight range this morning. MSCI Asia Pacific Index eking out a small gain of 0.3%. The Nikkei 225 is the outperformer, up by 0.8%. US and European equity futures are steady. 10-year US Treasury yields edging up this morning. The S&P 500 closed in the green yesterday, higher 0.2%. So actually 3 days of gains for that index, the first time since early February. And the index and investors shrugged off a miss in US consumer confidence data. European stocks also ended positively yesterday. US Stocks 50 futures rose by 1%. So those are the markets.
In a moment, we'll bring you more on our look ahead to the spring statement here in the UK, plus how Switzerland's finance sheriff is facing off against its biggest lender, UBS. But another story that caught our eye this morning, if you're a fan of using ChatGPT, there's an update coming. Now, some of this does actually appeal. So it's going to be a focus on changes to visuals. So our colleague Rachel Reeves has been writing about the OpenAI announcement yesterday. So you could feed in more directions, for example, to create things like charts. You can see that as being very useful in the business environment as well, but also for images. And the example that Rachel uses is a user might, for example, request an image of a snail in a city, then ask to change part of that backdrop and add a hat, which is perhaps more indicative of what people are actually using ChatGPT for.
I don't know.
Hello, I would like a snail in a city, please.
Yeah, that's funny. Well, that's the thing about these AI tools, isn't it? It depends on what you're going to use them for. Is this going to be a huge help to advertising executives or anybody else?
And yet again, the question of the information that you feed into it has to be good as well. There have been errors highlighted in some of these charts, like, for example, ChatGPT could make up things while generating images, including text with fake country names, for example.
Ooh, that's dangerous territory.
The company's actually made a blog post about this, saying that these errors can happen with less detailed prompts from users. So perhaps a lesson that if you are using ChatGPT, you do have to give it very clear instructions. Still a use for humans, is the way I look at it.
Yes, exactly. Very good. Let's bring you more now on what to expect from the Chancellor's spring statement here in the UK. Rachel Reeves is expected to announce billions of pounds of spending cuts to put the country's fiscal trajectory back on track. And our UK politics reporter James Wilcock is with us for more on this. Good morning, James. What policy announcements then are we expecting today?
Well, Caroline, this is supposed to be the annual economic outlook for the country. So arguably, we shouldn't be expecting many at all. That's certainly what Rachel Reeves would like you to think. However, she's going to be publishing the forecast by the Office of Budget Responsibility, which is expected to halve its growth projection for 2025. That leaves the Chancellor, at least Bloomberg Economics think it does, needing to find £15 billion in savings to shore up her fiscal headroom. Now, we know that there is apparently $5 billion from welfare cuts. Now, I say apparently because there are press reports overnight that say the OBR haven't been totally convinced by that $5 billion saving cut. They put it more at $3.4 billion. Now, the other sort of money is going to be coming from 15% of civil service admin costs are going to be cut by the end of the decade. That we expect will be about 10,000 jobs. Reeves has said that publicly. And there are again press reports overnight saying that there's going to be a £2.2 billion increase to defence spending on top of what we've already seen coming from further cuts to foreign aid. Now, a lot of that is press speculation until Reeves gets up and says it. It's not true. However, there is a lot of looming in sort of big spending cuts, plans to lower disability benefits, and crucially, there is no tax rises planned because Rachel Reeves has said this is going to be not a major fiscal event. Having said that, I'm going to give myself a bit of wiggle room, if that's all right. We've been hearing talks for the past few weeks about potential tax change to the digital services tax as part of US trade negotiations. That wouldn't be a rise, that would be a drop. So theoretically, if something were like that to be there would be a way of fitting that in. As well as policy, a few other things to watch out for. The DMO debt issuance plan, which is going to be where the markets will be watching out for where all this money is going to be coming from, how it will be issued. The OBR's press conference themselves about where they dig into the economic outlook, and also the impact assessment of these welfare reforms, which are going down very controversially with Labour MPs, is going to be slipped out just as Rachel Reeves speaks.
OK, so a busy day ahead. Let's talk about the politics then. How will Rachel Reeves be trying to sell this to her own MPs, some of whom are very unhappy with the announcements already flagged, and to the public?
If you want to understand Rachel Reeves' thinking, Stephen, you need to go back to her May's lecture, which she gave this time last year. The three words you need are stability, investment, reform. And that is Reeves' entire pitch and has been ever since. She's going to bring back stability by restoring her fiscal rules. That is rule number one. She's going to bring back investment by restoring stability. And then she's going to reform Britain's public services to bring back growth. That is the pitch, and it has not changed. I think the one thing that is new will be that there are tough choices. We live in a world with higher defence spending now, with more global trade uncertainties, and you're going to see that played up. But the core message has not shifted. Despite that, the Conservatives are calling this an emergency budget. I mean, given it's a pre-planned fiscal event, that is potentially a bit rich, but Reeves has a lot of big headwinds here. In just 5 days, you'll see council tax go up, you'll see the water bills go up, energy bills, national insurance contributions. There are a lot of very difficult messages she's going to have to sell.
Yeah, absolutely. And yet concerns that perhaps even in the October budget that taxes would once again be, a focus, tax increases. The message then, just lastly and briefly, for the markets and what she's going to try to say to investors.
She's going to try and say that she's still in charge and things are all underhand. She set hard numerical fiscal rules. She left herself the third lowest fiscal room on record, and now the forecast has moved. She's going to say, I'm still the Iron Chancellor, I'm still a Labour Chancellor, but I'm pro-business and you can trust me.
OK, James Wilcock, our UK politics reporter, thank you very much. We'll bring you the Chancellor's spring statement live here on Bloomberg Radio. UK listeners can join us from 12 noon. Rachel Reeves due to speak at 12:30. We'll have analysis from our political and economics team here in London. And there'll be a special episode of the Bloomberg UK Politics podcast to download later.
Now, a drive to disrupt the once cosy relationship between Switzerland's banks and regulators has put the head of the country's financial watchdog on a collision course with its largest bank, UBS. Stefan Walter has been speaking to Bloomberg about his first year in the job as CEO of FINMA, and our senior finance reporter Laura Noonan joins us now for more on this. Laura, good morning. This is such an interesting story. What has Stefan Walter done to shake up Swiss finance so much in his first year?
Hi, good morning. Thank you for having me. So there are two things he's done. First of all, the Swiss banks, and particularly the largest Swiss bank by some measure, UBS, are noticing a much more, they would say, intensive, intrusive day-to-day supervision style. So they're hearing from FINMA a lot more. They're having to provide them with a lot more information. And that has been a hurdle for them to get through. But the more material thing they've done beyond that is they are part of this broader Swiss debate about the too big to fail rules that UBS should have to follow, which would, now that they have bought Credit Suisse, which would see a significant capital increase for UBS. So they are part of the contingent which is advocating for UBS to have to hold 100% capital backing for all of its foreign subsidiaries, which basically means a $25 billion increase in capital for UBS, and which would mean they would have that they would have a key capital ratio of around 20%, which is significantly higher than the other large international banks and than basically any other bank that I have ever covered. So the main thing that has put FINMA at odds with its banks is the very high capital requirement it is pushing for UBS to have to maintain.
Okay, so this sounds like something that banks, could be fairly reluctant to get on board with. How is Stefan Walter and his actions like this being viewed by the financial community in Switzerland?
I think it's fair to say Stefan hasn't gone on a charm offensive with it. It's very different to the climate in the UK and in the US, where the regulators are very much trying to win over their banks. In Switzerland, the dynamic is much more, we want you to do this, so do it. So it's more of a combative, fractious dynamic. So how it works is FINMA doesn't actually decide on this major capital rule. They just influence the politicians who decide. FINMA, I don't think, has spent a huge amount of time trying to convince the bank that this is the right thing, because the bank fundamentally believes it is not. So you basically have the two poles. FINMA says the bank should have to do X, and UBS says we should absolutely not have to do X. And at some point in the next couple of years, the politicians are going to decide. The bank there's been a lot of productive dialogue between the bank and the regulator on this topic. But the backdrop is very much that Switzerland is the only country which had a globally systemic bank fail, and that left a lot of scarring. So we are 2 years on from the Credit Suisse failure. It might feel like quite a long time in other parts of the world. In Switzerland, it still feels quite recent. And that has really inspired a dynamic where the regulator is much tougher, and the regulator wants to be seen to be much tougher. So it's not really about building consensus with the bank. It's about curtailing the bank and making sure that UBS can never collapse in the way that Credit Suisse did.
Yeah, absolutely. And the trauma of Credit Suisse, as you point out, I think perhaps is underlying this. How much support, though, does Walter have then to push for stronger capital requirements at UBS, i.e., where do we think this is going next?
Well, we're going to be testing this in the coming months. So there's meant to be a proposal in May, which could possibly be June, which will show how the wind is blowing from a political perspective. But then there'll be another 2 years of trying to hammer this thing out. Would they actually go and do all of this? It seems to me unlikely, but you couldn't entirely rule it out. The other interesting thing about Switzerland is that if they can't reach a decision politically, they could actually have a national vote. Switzerland loves a good vote, and you could have a referendum on UBS's capital where we find out what the man on the street thinks. And I did speak to a few people outside Swiss finance when I was there last week to try to get a sense of how much normal people care about this. And the answer from the cross-section I spoke with really, really varied. I mean, I met some people who were completely unfamiliar with this entire debate and didn't seem to care. But then I also met people who had lost money on Credit Suisse and felt very strongly about this. So I think it would be really interesting were it to go to an actual public vote and see how everybody in Switzerland feels about it. But at this stage, it seems unlikely that they are going to go all in. Some of our listeners might have seen a story that we ran about the potential for UBS to move headquarters in the event that they did go all in. And the basic maths of that is being held to a common equity, being held to a CET1 ratio of 20%, 21% is just very difficult to reconcile with also acting in the best interest of shareholders and also giving shareholders the return that shareholders need. So if UBS or if Switzerland is faced with a situation where we do this to UBS, where if they pursue this route, they would lose UBS, it seems hard to believe that they would actually do that. So my best bet is that we get to some kind of a compromise. but we are a way out from that.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.